stocks are on pace to still be up this week despite all of these tensions. Agora financial market strategist Alan Uckman says there's a reason for that. We've also got Fox News contributor John Layfield. Gentlemen, welcome to both of you. You know, Alan, you always hope markets notwithstanding, cooler heads, calmer heads prevail. Right. We know from the history in China that's not always the case, but that they're hoping that's the case. What if they don't? I don't want to give the worst case scenario. All bets are off, right?
Well, I think that the market priced in the worst case scenario, but we had a healthy rebound and a great reversal last week where we made new swing lows and a higher weekly close. That's how bottoms get put in. We were only 2% away from the all-time top in the S&P, so it's been almost a full V recovery that we've seen many, many times before. I'm standing in an interest rate pit right now, and I'm looking above me. The market's pricing in a half-point cut here in July, so that should be beneficial to the stock market, and I think that could add to the upside. But we all know what's out there. We've all lived this now for going on 2 years, so I think we're kind of comfortable with the possibilities. But like you said, smart minds should do the right thing when it comes down to it in the end.
Interesting, you know, John. And as Alan said, you look at the markets. If they're panicked about this, they're not showing it yet. Now I know you've reminded me. You're a good market historian yourself. There could be black swan developments. Maybe what's going on in Hong Kong right now. Maybe what's happening, around Iran. So either one, both of those could dislodge this. But what do you think?
Yeah, I think they could. Right now, look at the Chewy IPO. Look at what happened with Lyft. I know it went down afterwards, but how much interest there was in the Lyft IPO. There's a lot of money out there chasing yield right now, and there's not much yield in the world. So you have emerging markets have not been good. Germany has had problems with their manufacturing index, was terrible in this last reading they had. You also have Brexit. You have China that has problems aside from the tariffs. So the United States market, the NYSE and the NASDAQ are the best places right now to get yield. And so it's masking a lot of things that are out there. I think there's a lot of fractures developing in global trade. Now, this could be ameliorated and it could be fixed, but there's also a potential downside to any of these factors, and much less if you have a cascading effect of one domino knocking down another. We could be in for a rough patch.
You know, Alan, the worry is that, and this is where the half-full glass comes in, that the worse things look right now for China, the more it pushes them toward a deal with us to mitigate that damage. They just saw factories growing at their slowest rate since 2002, and some of the latest data, virtually the majority of which has been softer than expected, happening more rapidly than expected, and that will ultimately compel them to keep things calm in Hong Kong, and furthermore to score a deal with us. What do you think of that?
Well, maybe, but let's remember that their GDP is still at 6%, double
That's
what
right.
we do on an annual basis. So their numbers, well, they have backed up. Their stock market has performed extremely well, better than ours here in 2019. So if you look at those as metrics, I don't know. Again, I think common sense should come into play at some point. But what I really am encouraged by is the fact that we don't have specific objectives on what a good trade deal looks like. So I think anything that we come up with, you can call it a win, and we can move on and just claim victory. So that could be very much a positive, and the markets continue to do what they've been doing for the last 10 years.
So let me flip it around then finally with you, John. I mean, there is an argument that the worse things look for China, the better things look for us. You're going to seek out a safe haven. The United States has proven that, and we benefit. Our markets, that is. What do you think?
I completely agree with that. Look, the place to go right now in the world right now, you don't want to go to China, not because of the trade wars. Look, they're doing a lot of things to prepare for a very long trade war, which could be a new normal. But right now, the best place to invest is by far in the NYSE, the NASDAQ. It's just, there's just not competition out there as far as yield that is going on. And as much problems that we have with our trade war, which could escalate, the best place by far still to be is in the United States.
All right, gentlemen, I want to thank you both very, very much. Again, the market down about 46 points, so this is a rather tame response. Certainly you don't see it in any of the new offerings of late. The latest, of course, to be is Chewy.com, the online food provider, pet food provider, pet toys, all the rest. My German Shepherd, Brittany, they love it. They love the company. They were very happy. I don't know if they got a piece of this. They wish they had, but it's up about $11 right now from its $22 a share offering. They're very happy about that. So there is that after this.
Live from Pebble Beach, special coverage of the U.S. Open. Melissa Francis brings you all the highlights plus unique insight tonight. on After the Bell.
Not getting enough cash back with that credit card? Turn to the nerds. Want to invest that bonus? Turn to the nerds. Looking for the perfect mortgage? Turn to the nerds. Oops, sorry about that. Hey there, need a travel rewards card? Turn. Auto loan? 2. Want a lower interest rate? The nerds. The experts at NerdWallet make it easy to make smart money moves. Compare credit cards, mortgages, savings accounts, and more at nerdwallet.com. Not sure you have the right credit card? Know which one to get? Turn to the nerds. Hey there, aloha. Need a card with great travel rewards? Turn to